All right, everyone. Welcome to Beyond the Headlines, episode 10, with myself and Steve here. Again, if you're new to the podcast, first of all, welcome. If you like what you see, make sure you're subscribing and retweeting and commenting. We read all the comments, we respond to them, all that kind of stuff. But me and Steve are traders here with Trade Ideas. We like to look at data. We like to look at charts. That's what we focus on in Trade Ideas. So we thought it would be fun to start this podcast in which we delve into whatever the most important news going on out there in the week is, but get behind those headlines because we know as traders that headlines are not really what moves markets. We want to go and say, this is what the chart's saying. These are some potential actionable ideas that we may take a look at in there as well, and just kind of cut through all of the noise. So this week we are going to talk about more marijuana news. It was last week, it was good marijuana news, and now it's bad marijuana news, and we're going to talk about how the market told you in advance that something like this was going to occur. Actually, just breaking news now. This morning we had Biden say he's going to impose some tariffs on electric vehicles from China. So we're going to take a look at all those electric vehicles, see if there's anything that sticks out to us there. And then we're going to talk more nuclear. We talked some nuclear last week, got a good trade out of that, and we're going to talk about some more alternative medias that are picking this up as well. So without further ado, how are you doing this week, Steve?
I'm doing good. Nice to have a weekend.
Absolutely. Okay, let's pop in right away and let's get started here with our first article, our first news event, which again, it's more of this marijuana type news. So, just to summarize, anyone who missed the last episode, which what are you doing? You should definitely watch the last episode too. Last week, the DEA, and you're going to see a Canadian fumble my way through all of these lettered organizations they have in the States, but the DEA, which, as I understand, is the Drug Enforcement Administration. I'm doing all my research here. So they go and they bust people that are doing bad things with drugs, and they classify all of these drugs, and they were going to declassify weed from whatever the worst drug on the planet is to a little bit less of the worst drug on the planet. And that got this big pop in the marijuana stocks, gave that back, and then later this week we actually hear that somebody from the DEA, I guess, is putting a stop to this and doesn't want to sign this bill until there's some changes or something. But as we get through into it here, let's just take a look at MSOS. Now, this was last week when we saw that news, and then you can see immediately the next day, most of that was reversed, and then just red day after red day after red day after that. So before, again, I want to reiterate, all of this action here happened before that news came out that someone may not sign this bill, and now we are, at least for a little bit, we were below the day in which that news came out. So what do you think of the wheat sector there, Steve?
Well, come on over here because last week people can rewind and recall that I said I'm taking home CGC over the weekend. I liked the fact that it had, here's the news day,
Mm-hmm.
1, 2, 3 days, and then it was resting right there at my favorite moving average. So I'll take a 3 day pullback right at my 10 SMA after a big news event, right? I'll do that a million times. But guess what? Monday came around and it gave me my signal candle. What's my signal candle? A closing candle below the level I was using to support my bid, which for whatever reason, I don't know if it was the headline of somebody not signing off on it. I'm going to give you my take here in a minute, but the point being is it's still much lower than where it was on my signal candle. And like even Michael alluded to last week, these are just trades. I'm not married to them. If they don't work, I just rip them off and throw them in the trash can. I don't count the losses or the paper cuts. I'm going to offer this. The headlines might say that this can't go anywhere because of a particular director at a three-letter agency not signing off on it. Again, I live in California, and out here it's pretty easy to pick up the phone and find it. And what I'm getting at is these companies like CGC or Tilroy or some of these other ones that are the main companies in the industry, they're the good guys. They're following all the regulations. They're following all the rules. They're doing everything asked of them. And I just ask at the end of the day, is there any real sustainable margin of profit
Right.
for growth for these things? Because I can grow the stuff myself if I wanted to. I don't, but if I wanted to, I can. And every state is different in our country, but the headwinds of the black market are very difficult for this business model, and I'm just going to leave it at that. And I think the chart, every time it tries to do something, it can't get out of its own way. And I think that my scenario is it's just a doomed business model. It's a plant that grows out of the weeds, and a lot of people aren't really interested in playing with regulations, and they just go to the circumvent. And that's my thought on the
I
industry.
could I couldn't agree more. So again, up here in Canada, it has been federally legal for years now. I think 5, 6 years, and there's been no company who's made an absolute killing doing it. The companies that when we go to our stores, they buy, they're just little mom and pa operations. Like we're allowed to grow out here as well, and that's what happened. Is that when I go there, I live in Nova Scotia, which is the whole population of like 1.5 million. And when I go, I'm buying Nova Scotian farms that aren't owned by giant conglomerates. It's just some guy who's got a little farmland, and he just, you know, takes the trip. He just buys the stuff, and away he goes. But I think your point on the pops and drops is huge, Steve. You want to zoom out on that chart a little bit? Just give us a big, wide breath there. And this is a chart that you can see all of the time when it comes to the meme stocks and it comes to industries like this that are broken. They do these, yeah, it had this massive growth, right? So you got to think all on that left hand side of the chart, there are people that still own CGC from what's that, like $400 a share or more. And that's why, in my opinion, every time you see a chart like this, it's just in technical analysis, it's a broken chart. We just call it a broken chart. Every time 600, every time this thing spikes, we've all done this before and we know we shouldn't, but we've all been holding a stock and we say to ourselves, if I ever get back to even, I'm out. And you got to imagine that whole way down, there's a whole bunch of people that are saying, if I get back to even, I'm out. So every time you get one of these spikes, you don't have people that are really looking to buy, you have people that are really looking to sell. And I think you really just can't get away from that. You can see the same thing with AMC, and you can see the same thing with a lot of these kind of broken stocks, and they're, can you get a good trade on CGC? Like, I'm not disparaging Steve's trade at all. If he was right, he's going to make 5, 6, 10 times what he was right than when he was wrong. Yeah, Tilray just looks insane. Um, but yeah, you have all of these people who are stuck and they're waiting for these sells. Now, as professional traders, we know you're never stuck in a trade. You should just kill it and move on with your life. It's probably never going back. But that's what I think is happening with this industry. And I don't think it's ever really going to get going. Doesn't mean, again, if we see these setups, we're not going to take a trade, because if it bounces a very small percentage of the way there, then hey, I think that's great. Okay, now let's pop over here too. So this is one Steve sent me, so you may know a little bit more about it. But Biden set to oppose tariffs on China on electric vehicles. So we have, I think the idea is that people who are making electrical vehicles in the U.S., they're fine, and it's going to be people who are making them in China and shipping them over. There's going to have to be a tax. Is that what is going on here?
Yeah, matter of fact, it just occurred to me. Maybe you'll look it up as I'm talking. We can go to my charts too, and we'll look at the some of the names. Um, I think Chevy is like gonna make even more room to build more EVs. So domestically, they're building out more space to create those, whereas they're going to shut off the Chinese valve. So that brings us to a few stocks.
So
NIO.
just so I
Uh-huh.
know, so that's the goal. The goal is we don't want to buy the Chinese stuff. We want to buy the American stuff. So we're going to make the
We
Chinese stuff more expensive.
Expensive, correct. So we're
Gotcha.
going to discourage the buyer from having to pay the tariffs. These are in horrible downtrends, so it doesn't seem like there's really anything new to the EV investor for China. But this is new news, so a bit of a red candle as we speak here, trying to hold that 10 SMA. It was trying to come out of that downtrend. It was really technically trying. It overcame a few hurdles, and then that news just kind of threw it back down into the wash, not helping. I think was it Lee as another one. Same thing here.
Mm-hmm.
Today's red candle throwing it back down underneath. Was XPEV was another one. Is that correct?
Yep. XPEV. There
Oh,
you go.
okay. Horrible red candle again. Can't get above the 50-day moving average, and that kind of it brings me back to a comment again from last week. Rewind the tape. We were talking about pro gaps and do they mean anything? I said, well, Tesla just had a pro gap, and Tesla is the penultimate US EV car maker, and it is having a hard time. The 50-day moving average, shout out to Brian Shannon, is the general bill of health for an index or a stock. We are now healthily below the 50-day moving average and challenging the 20. We might be down here in clean air to the downside very soon in Tesla. So this might be one of those cases where the pro gap didn't materialize because, as I said last week, that might just grind here, wait for this moving average to catch the price. Guess what, everybody? The footprints in the sand are telling us that scenario didn't happen, and EVs, whether they be domestic or Chinese, are having a hard time.
Yeah, and the biggest thing that I want to point out here in a lot of cases is that, and part of the reason we're doing this is yes, there might be some trades that you take on these headlines, but at the end of the day, you have to go to trend. Like Steve talked about, the all of these makers. Go over here to my screen. All of these makers like XPEV and NIO, these are weekly charts, these are long term charts, and they're all in downtrends. And this is an old kind of technical analyst saying that, um, you know, trends generally precede news. So the news will come out often in the direction of the trend. If that reverses and you have a good bounce, that's great. Like with this Tesla that Steve was talking about, it looked like maybe we were gonna have a second here, but it just didn't occur, right? So, we're here in Tesla. It had that pro gap that we were talking about, and then just kind of fell apart. But this is happening in the overall conjunction of this awful downtrend, and that's going to be the kind of nature of it. Now, when it comes to some of these news events, if they are good news and the trend is, bullish overall, then I think looking at these makes sense. But yeah, when you see negative news and you see a downtrend already, what I'm looking for, if any of these are going to then buck that trend, right? That to me is when things get interesting. If Neo closed higher today after that news or something, that's when I'm gonna take a look. All right, now we got
On a pure chart, if you go back to Tesla before you
yeah,
move on the pure chart there without using any my special moving average lines, there's a lot of people probably buying that gap fill. Oh yeah, I'm just going to lick my chops to buy that gap fill. So that's your last line of defense, bulls. If that gap fill doesn't hold, guess what? There's another gap below that.
yeah,
There,
and that
right
right, and then below
there.
that, really, if we go to like the monthly chart here. Below that, that's nothing. Every time,
Support.
yeah, I see these kind of topping tails and bottoming tails, when I see a tail like that, and the market makers know, there's a whole bunch of stops right below that level right there. There's a bunch of people that are buying this. So if we end up breaking that kind of 134, 135, I wouldn't be shocked if we see a flush to 100 or below on this name if these trends continue. And again, someday Tesla may turn around. It may hold into some of Steve's moving averages that are hopefully at that point pointing higher. It digs in and we'll take a trade, but we're not seeing that right now. Regardless of the fact that this headline you would imagine would be bullish for Tesla as an American EV maker. It just seems like the EVs in general are just having a hard time. All right. Now, last but not least, but I'll let
Mm.
Steve pat himself on the back a little bit here too. We were talking about some nuclear plays last week, and we're going to go a little bit deeper into those again. I've been a big fan of uranium for a couple years now. Steve's been playing around these, and then all of a sudden, when did this actually came out? Oh, May 9th. So it came out yesterday night at 9 p.m. All of a sudden, we have now Zero Hedge, which is an alternative media source, talking about them as well. So now we've seen mainstream media start talking about nuclear, and alternative media talking about nuclear. Seems like everybody is kind of piling into this theme or this story, which is great if you can be in first, or you can at least have yourself familiarized and have a watch list of charts and names that you're interested to get in first. Because now what you want, if you're invested in something, is kind of the whole world to go, you know what, that's actually a good idea. I never thought about that before. And as they're buying, you're already in your position. And then when it becomes fever pitch and you start to see the articles everywhere, hopefully you're in the position where you're looking to get out of what's an already great trade.
Well, more importantly, again, roll the tape back. if you guys aren't seeing the early warnings that Michael and I are picking up on, we were talking about the small modular reactors last week. And that's pretty much what Zero Hedge was pointing to there. There's a couple other companies out there, but we mentioned SMR, and it did, in fact, turn into the trade of the week. And it was a bit tricky because I normally don't like to call trade of the weeks as the curator so close to earnings. And right here kind of tickled the price that we wanted to be the trigger. But I said, you only got 4 days to hope for any follow through. So nothing came. I got out of my initial position, waited. And I said, I'm just going to wait and see what happens with earnings. Well, earnings came out last night, and this thing took off pretty handily this morning. Let's see if we can find an intraday chart. Beautiful. Um, I'm not looking. I'm long and strong. By the way, I got in on the open right about 6:0. That blue line right there is pretty much my entry, and I'm looking for my particular day and a half trade over the weekend, where today would be day one. I need this to close at high. So hey, the cat's out of the bag. It's Sunday, and we're still here on Friday waiting for the close. So, not quite sure how SMR is going to resolve by the time you guys watch this video, but it's recapturing the intraday move. I wasn't in profit taking mode. Otherwise, I would have used this candle breaking my intraday 1510 SMA. I'm looking for day one. I'd like to get this thing back up into the high sixes and close near highs. And then Monday, as a short term swing trader, I can flip out of this and kind of become a seller. And I would start maybe selling um, like around that high there, and then maybe this high here. We have great relative volume today. So, Catalyst with the yellow stripe of earnings. We've had almost, as I called it, like a double cup and handle,
Hmm.
riding the 50 SMA. It's just solid as a rock. I want to be in this thing for at least over the weekend. I'm hoping that we can get a close up near highs. We'll find out. We'll know on Sunday when we release the recording. But for now, this is all the information I have to work with.
Well, and so I'm going to go over to my charts because I'm in this one as well. Just full disclosure, because I really liked the story behind it and I liked the chart. I am a longer term trader than Steve, which again is the beauty of kind of what we do at Trade Ideas. We got some people who are exclusively day traders. They're out every single night. They don't want to hold anything. We got Steve, who's looking for that a couple days to maybe a week. I'm more of give me a couple weeks to maybe a month. And again, Trade Ideas can find whatever it is that you're looking for in the different time frames. The idea that I really like here too is that if we can break and hold above this anchored view app, which we talked about in the last episode, is the anchored view app from the IPO, then we're great, right? That's what I want to see for a bit of a long term move because that means the average market participant since this stock has existed is now positive. And I really like again. I know Steve likes this too. The 20% short float on the name looks very very interesting. So the idea is, again, if we can hold above that, and that I calculated out, we're talking around 650 give or take. And then we also looked at the anchored view app from this high right here and we're still well above that. So for me, I'm in it as well. I will sell part if we get any kind of a move up, but I want to hold this one for potentially a very long time. If I can get a little bit out of the trade to pay for that, I want to hold that for a while. I'm looking for all time highs on this one if we can get it, which would be like 15, which would be a triple. If I can get anywhere near that, I'm going to be a happy camper.
Maybe if I'm really disciplined and patient, and I do get a move and I get my perfect day and a half move, maybe I'll find a way to try and save 25% or 20% for a bit longer.
I'm talking you into it. And I think that's actually, let's just go here for a second. I think that's actually a good topic. So, a lot of people that are new traders, they're thinking all in and all out, right? That's the way I'm going to buy it or I'm going to sell it. And those are two binary things. I'm either in it or I'm not. What me and Steve are talking about, which I always forget, is sometimes new for traders, is that nothing says you have to be all in or all out, right? Say you buy, you're, buying $10,000 worth of SMR, right? Just make the math easy. It's mid afternoon here on a Friday. I'm gonna make the math easy on myself. So you buy $10,000 at $6, and then it goes up to eight, and maybe you sell half of the position. So that original $5,000, you sell that, and then you're gonna pocket another two K or something off that. That's great. So of the 10 you put in, you got seven back out, and you can move that to other trades, and then you still have that initial position in there. Again, there's nothing there's nothing saying you have to be all out of the position. So when I say, and we'll go back to my chart here, when I say that I'm going to try to hold a bunch, I don't mean all of it, right? I bought a little bit. I got a worse price than Steve. I think I just had a standing order just above this price right here, just because I'm more of a set it and forget it kind of trader. So I think I'm in at like 30 at 6:30. So say we get a little move, up to 7 or 8. I'll probably sell, like Steve mentioned, half or maybe even two-thirds of the position, because that will then kind of pay for the rest of the trade. If this trade turns around and it tanks and I get out at like $4 or something, it's like, okay, it would probably be a scratch trade at that point. And then that gives me the confidence to say that one third that's left, just going to leave it, right? See what happens.
You can't say enough about the mental aspect of taking off 2/3 because it satisfies the demon of fear, which is if I don't take this now, I'm going to lose that money that I'm staring at and car payment and the trip and the house. So you start, justifying why I need to take this profit now. Whereas if you just take a good chunk of it off the table, that demon just goes away and you stop thinking about it. You're like, I don't care. I made money on that trade. Let's see what happens.
Yeah. Yeah, if
Try
you
it.
know, you put a stop at let's say under this low right here, you put a stop at 450, right? If you've taken two-thirds off the table, then probably if you get stopped at 450, it's a scratch trade, or even you pull in a few bucks and you give yourself
Mind
that
med.
opportunity.
It just occurred to me is why I've been doing mine. We call it a trade around, on a big. I took a big chunk of that big move, including that gap, and then I lightened up. Yesterday was quite interesting. I had to sit. Michael and I both had to sit through a fun stop hunt. It wasn't fun, but what doesn't kill something makes it stronger. And when it survives something like that post earnings and pops right back into the range, I'm okay with that. The problem is having to get up and take a walk and not look at the screen 20 minutes after the open because everybody set a good till canceled market stop order and they sold your order flow to Citadel and they're running stops because they quantified it in real time and blah, blah.
Yeah, and that's, I always people always ask, they say, "Hey, does the market maker know where my stop is? Are they coming after my stop?" And I always say, not you in particular. They don't, you own 1,000 shares of MindMed, they don't really care about you. But what Steve was talking about, and definitely I think what happened, let me just move this line up here.
They see a scatter plot, is what they see.
Yeah, you see this area right here, this kind of eight whatever. They're looking at it, they're saying, I know, just like I talked about on Tesla. The market makers are using charts and they know that I know there's a whole bunch of stops, probably right under eight, around $8. And then I want to buy as a market maker, as a hedge fund or whatever. So I know if I can push it under this low right here by selling down to it, then we're going to get this flush. And you see it flush down to like 790, 780, and then just ripped all day. And that was probably the market maker saying, okay, now that I've flushed the stop, that's given me ample liquidity to start buying it and buying it up. And like Steve was talking about, if you had your entire position still in this name, that might be
Mm-mm.
a little hard to sit through. But if you're
I
out
would have
and
punched out.
yeah, you're like, get me out. And then you're really mad because it's reversing, literally minutes later from that low. We can actually go into like a 15-minute chart and I can show you. Um, so yeah, that's that wick low, right? So it's a
By the
wick
way, can I
of
just talk
50.
about this in real time? And Michael and I were actually communicating during this. I said, I'm going to give it 20 minutes. It's probably going to test lows, maybe two, maybe three times. It doesn't do it once, maybe a second or third push in the first 30 minutes. Once it's done that in the first 30 minutes, I will literally put in a hard stop. And I
Yep.
did at the low of the day.
Yeah,
But the hardest thing is sitting through that first wash.
yeah, it's that opening volatility. You're basically waiting for that. And I one of the traders I used to trade with who swing trade in the watt for a long time called it the first 30-minute rule. And his idea was that if he's in, say he's in this stock and he's got a stop loss right here and it gaps and it just flushes, his rule set says I'm going to sit back and I'm going to wait. I'm going to give it that first 30 minutes and then I'm going to put my stop the low of the day. I'm just going to wait for all the craziness to take place. I'm going to put my stop right there. Then I have a hard stop and I'm not justifying it all the way down.
That's what I do.
Yeah, but his idea was let's let all the craziness and the algos and the day trading scalpers, let's get them out of the way, and then I'm going to see where the stock is and then make a decision then. And it stops you from kind of puking out what could be a good position down here at seven something before it kind of rockets
Mhm.
back up. So, okay. Now that is all the articles today. So do you have any ideas for the people, Steve?
I don't really have any ideas per se, but I just, say, if you want to come to my screen,
Sure.
I did a lot of videos. I went on Trader TV and I talked about the 50-day SMA was just an absolute ledge on the NASDAQ.
Hmm.
And then right there was our break day. I started to get negative. I started to use some short ETFs. I cleared out of my long and I went to cash for the most part of my 401k because I can't short or do crazy things. So my 401k just went to complete defense, pulled back, and I waited to see what would happen. Here was where the rubber met the road right here. We had every opportunity to just roll back over and test that low, but we didn't. The Feds found a way to kind of get the shorts squared up again. And when you see this gap after a failure to go to lows, that's the shorts absolutely getting raked
Hmm.
overnight. Raked, I said with a K, and pop up, pop up, pop up, grind, and then build a new base camp, a happy base camp above the 50. So I made a video. I have no problem going back and say, yeah, I was in defense mode here, but guess what? You should have seen how many long positions I had coming into today. Why? Because we're back above base camp and we're looking for strong stocks again. It's just the way it is.
And that's the
I don't
beauty
have
of,
any particular individual names, by the way. Sorry.
well, no, but that's the beauty of what we do and what I think that's great because a lot of people they think that there's no advantage to be had on the day trading. There's no the institutions know everything and they control the market. Blah blah. A first of all, it's not true, but the advantage that Steve just talked about is we have the ability. Most institutions have to be invested 99 or sometimes 100% all the time. Rarely can an institution just go to cash because they're like, well, what am I paying you for, right? You're meant to be involved in the markets, and God forbid they're in cash and the market rips, and it's just a nightmare. So we have that ability, right?
I'm a speedboat and they're an oil tanker.
Yeah.
So my day and a half scenario works perfectly in this type of scenario playground.
So I want to, and I'm actually gonna. I'll grab. I'll do a little. This is what I'm watching going into next week, and I'm gonna do a video after this. And this is gonna be a video that's gonna start coming out on I think on Fridays. Or on the weekends. And I like to use TI Strength, which is right behind Steve's head. And the idea there is that this is an algorithm that we built, that we've back tested, we forward tested it for years. We show that it helps outperform the market. And what it does, it looks for relative strength. The concept basically being there's a whole bunch of academic studies done that go back hundreds of years. You buy the strongest stuff, you sell the weakest stuff, you outperform the market, right? Simply put. I like to get themes from it. And I think Steve will be able to pick up this theme pretty quickly. So, number one is PHYS. Number two is IAU, right? We have OUNZ. So, there is a lot of gold and there's a lot of silver names in this actual watch list. So, for
You
me,
know why I like PHYS? I'm sorry.
why? Yeah.
Again, it's Sprott, right? Sprott Physical.
Yep.
So GLD, there's really no accounting for how much gold backs up the paper ETF, but PHYS literally has an audited vault they can back up. So ever comes a day where there's headlines where can the GLD ETFs back up what they are really buying and selling? PHYS will stand up and go, this is why we have existed from day one, because we are audited. We can prove we have the gold. Sorry.
That's I didn't know that. So somebody goes
There you go.
into their
You taught me
vault.
something last week.
That's why these are cool. So somebody goes into the actual physical vault and counts and says you said you had
They're
X amount of
audited.
ounces of. Oh, that's
Yep.
cool. I like
Yep.
that.
They are fully transparent.
So when I was watching these, what I noticed, and it's actually, yeah, no, we can use this one. This one works great. So this is the anchored VWAP here from the all-time highs of right here of gold. You can see Steve is a moving average guy. I'm, kind of a Brian Shannon has convinced me on this anchored VWAP stuff. So I'm watching this, and as long as we're below this anchored VWAP from all-time highs, you can see all the kind of choppy, sloppy mess that was going on here. We broke that yesterday, and then we gapped up here. So I'm seeing it from TI Strength, which is an algorithm we run. That gold looks interesting. I'm seeing it above its anchored VWAP from all-time highs. I like that. And then with that comes what they call gold's crazy cousin, which is silver, right? And silver, in the grand scheme of things, if I go to this monthly chart, has been underperforming, hasn't quite making those new highs, but same kind of anchored VWAP thing here.
Let's use PSLV, please.
Oh, that's what they do.
Sprott Physical. That's why you hear me talk about PSLV.
PSLV.
Again, audited
Yeah.
physical silver.
And you can see now I'm using this anchored VWAP to kind of show you some relative strength. So remember on gold, we just ticked above that anchored VWAP yesterday, and then today we gapped above it. On silver, we blew through this anchored VWAP yesterday, and we're holding above it today. So as always, I'm using trade ideas and the algorithm that I personally created. So that's one of the reasons I'm so biased about it to give me a theme. So I guess if there's going to be a trade taken from this, is grab your gold miner or silver miner of choice. You can grab these physical ETFs if you want. I'm sure there are leverage versions of these physical ETFs, but actually, while I was looking at it, look at what's just popped up right here, right under your shoulder, Steve, on
Nice.
TI strength. So we have SMR. So the
Just
algorithm's
trying to look
working on
away,
this
just
one.
trying to let it work.
The algorithm's working on this one as well. So there. So take a look at some of those. Maybe they're back in favor. They were out of favor for a couple weeks. Maybe we get back into favor on metals and mining and all that kind of stuff. So okay, everyone. I think that was a little bit longer than normal, but we were having so much fun. I just let it go. So thank you guys for coming by. Always appreciate it. Like, retweet, share, whatever you do on podcasts, rate it or whatever. We appreciate those. And we didn't have any specific chart requests, but as always, on any of the social medias that you see this, if you want to comment below, say, hey, can you take a look at XYZ chart, the headlines, and the chart behind it? We will certainly do that for you. Anything to leave the
Yep.
people with, Steve?
No, I mean, it's interesting. We are going into a weekend, so it's always a long weekend for gold and silver markets. So we'll never know what we wake up to on Monday.
Yeah, exactly. Okay, guys, have a good one. I'll talk to you later.